Imagine a world without banks. No more waiting in long queues, no more hefty fees, no more restrictions. This is the promise of decentralized finance, or DeFi. It's a revolution sweeping the financial world. DeFi uses technology to cut out the middleman. This empowers individuals and gives them control over their own money. But is it really the end of banks as we know them? Let's find out. This essay will explore what DeFi is, how it works, and why it's making waves. We'll delve into the benefits and the risks. We'll also examine whether DeFi will replace traditional banking or simply coexist. So buckle up and get ready to explore the exciting world of DeFi. DeFi might sound complex, but it's built on two key concepts: blockchain and smart contracts. These two elements are revolutionizing the way we think about finance and transactions. By understanding them, we can unlock the potential of decentralized finance. Think of blockchain as a digital ledger. This ledger is not just any ledger, it's a distributed one, meaning it exists across multiple computers simultaneously. Each entry or block is linked to the previous one, forming a chain of blocks, hence the name blockchain. It records all transactions across a network of computers. This decentralized nature ensures that no single point of failure exists, making the system robust and resilient against attacks or failures. This makes it secure and transparent. Every transaction is visible to all participants, ensuring accountability and trust. The cryptographic techniques used in blockchain further enhance its security, making it nearly impossible to alter past transactions. No single entity controls it. This decentralization is a key feature, as it removes the need for intermediaries like banks or financial institutions, reducing costs and increasing efficiency. Now imagine smart contracts as self-executing agreements written in code. These contracts are programmed to execute specific actions when predefined conditions are met, eliminating the need for a middleman. They live on the blockchain. This means they inherit the blockchain's properties of security, transparency, and immutability, making them highly reliable and trustworthy. These contracts automatically enforce the terms of a transaction when certain conditions are met. For instance, a smart contract could be set to release payment only when a product is delivered, ensuring both parties fulfill their obligations. For example, let's say you want to lend money through a DeFi platform. The entire process can be automated using smart contracts, from the initial agreement to the final repayment. The smart contract will automatically release the funds to the borrower once the agreed-upon conditions are met. This reduces the risk of default and ensures a smooth transaction process. Together, blockchain and smart contracts form the backbone of DeFi. They provide the infrastructure needed for decentralized applications to function, enabling a wide range of financial services without traditional intermediaries. They enable a new era of financial services that are open, accessible, and trustless. This means anyone with an internet connection can participate in the global financial system, breaking down barriers and fostering financial inclusion. DeFi is generating a lot of buzz, and for good reason. It offers a plethora of advantages over traditional finance. One of the most appealing is the potential for high returns. DeFi platforms often offer higher interest rates on savings and lending compared to traditional banks. Another advantage is instant borrowing and lending. Need a loan quickly? DeFi platforms can process your request in minutes, without the need for lengthy paperwork or credit checks. DeFi also transcends geographical borders. Anyone with an internet connection can access DeFi services regardless of their location. Finally, DeFi promotes transparency. All transactions on the blockchain are viewable by anyone. This fosters accountability and reduces the risk of fraud. The rise of DeFi, or decentralized finance, has sent ripples of unease through the traditional banking industry. This new wave of financial technology is challenging the very foundations upon which traditional banks have built their empires. Banks are starting to see DeFi as a potential threat to their dominance. The decentralized nature of DeFi means that financial transactions can occur without the need for a central authority, which is a stark contrast to the centralized systems that banks have relied on for centuries. And it's not hard to see why. DeFi offers many of the same services as banks, but without the need for a central authority. From lending and borrowing to trading and investing, DeFi platforms provide a wide range of financial services that are accessible to anyone with an internet connection. This directly challenges the traditional banking model. The decentralized nature of DeFi means that there are no intermediaries, which can lead to lower costs and faster transactions for users. This is a significant departure from the traditional banking model, where banks act as intermediaries and charge fees for their services. Banks are used to being the intermediaries, profiting from fees and controlling access to financial services. They have built their business models around this central role, and the rise of DeFi is forcing them to rethink their strategies. However, it's unlikely that DeFi will completely replace banks in the near future. While DeFi offers many advantages, it also comes with its own set of challenges, including regulatory uncertainties and security concerns. Traditional banks have the advantage of established infrastructure, regulatory frameworks, and customer trust, which are not easily replicated. Banks still have several advantages, including established infrastructure, regulatory frameworks, and customer trust. These factors provide a level of stability and security that DeFi platforms are still striving to achieve. Moreover, many customers still prefer the familiarity and perceived safety of traditional banks, yet, the writing is on the wall. DeFi is forcing banks to adapt and innovate to stay relevant. As the financial landscape continues to evolve, traditional banks will need to find ways to integrate DeFi technologies into their existing systems, offering hybrid solutions that combine the best of both worlds. The future of finance is likely to be a blend of traditional banking and decentralized finance, creating a more inclusive and efficient financial ecosystem for all. DeFi isn't just about disrupting traditional finance, it's also about empowering individuals to take control of their financial destinies. There are many ways to potentially profit from DeFi. One popular method is yield farming. Think of it as putting your crypto assets to work. You lend your crypto to DeFi protocols and earn interest or rewards in return. Staking is another popular option. You hold certain cryptocurrencies to support the security and operations of a blockchain network. You can also lend your crypto assets through DeFi lending platforms and earn interest on your holdings. Finally, decentralized exchanges, or DEX, allow you to trade cryptocurrencies directly with other users without intermediaries, potentially leading to better prices and lower fees. While DeFi offers exciting opportunities, it's crucial to be aware of the risks involved. DeFi is still a relatively new and evolving space. As with any emerging technology, there are risks involved. One of the biggest risks is scams. Because DeFi is largely unregulated, it can be a breeding ground for fraudulent projects. Always do your research before investing in any DeFi platform. Be wary of projects that promise unrealistic returns. Smart contract bugs are another risk. These are errors in the code of a smart contract that can be exploited by hackers. Market volatility is another factor to consider. The value of cryptocurrencies can fluctuate wildly. This can impact the value of your DeFi investments. So, will DeFi replace traditional banking or simply coexist? This is a question that has been on the minds of many financial experts and enthusiasts alike. The rise of decentralized finance, or DeFi, has brought about a wave of innovation that challenges the very core of traditional banking systems. But does this mean the end for banks as we know them, or is there a middle ground where both can thrive? The answer likely lies somewhere in between. While DeFi offers numerous advantages such as transparency, reduced costs, and accessibility, traditional banks provide stability, trust, and regulatory oversight. Both systems have their unique strengths and weaknesses, and the future of finance may very well see a hybrid model where DeFi and traditional banking coexist and complement each other. DeFi is still in its early stages of development. The technology behind it, primarily blockchain, is continuously evolving. Developers and innovators are working tirelessly to improve the infrastructure, security, and scalability of DeFi platforms. This ongoing development is crucial for DeFi to reach its full potential and gain widespread adoption. It has the potential to revolutionize the way we think about finance, offering decentralized solutions that eliminate the need for intermediaries. This can lead to faster transactions, lower fees, and greater financial inclusion for people around the world. However, the journey to this revolutionary state is fraught with challenges, but it also faces challenges. One of the primary hurdles is the lack of regulatory clarity. Without clear guidelines and regulations, DeFi platforms operate in a gray area, which can be risky for both developers and users. Additionally, the decentralized nature of DeFi makes it difficult to implement traditional regulatory measures. Regulation is a big one. Governments and regulatory bodies around the world are still trying to understand and come to terms with DeFi. They are working on creating frameworks that can ensure the safety and security of users while fostering innovation. This balancing act is crucial for the sustainable growth of DeFi. Governments around the world are still grappling with how to regulate DeFi. Some countries have embraced it, creating favorable environments for innovation, while others have taken a more cautious approach, imposing strict regulations to mitigate potential risks. This global regulatory landscape is constantly evolving, and its impact on DeFi will be significant. This lack of clarity can stifle innovation and deter institutional investors. Another challenge is scalability. As more users flock to DeFi platforms, the underlying blockchain technology must be able to handle increased demand. Current blockchain networks like Ethereum often face congestion and high transaction fees during peak times, which can be a major drawback for users. Blockchain technology, while secure, can be slow and expensive to use, especially during periods of high network congestion. This can lead to delays and increased costs for users, making it less attractive compared to traditional financial systems. Developers are exploring various solutions such as Layer 2 scaling and alternative blockchain networks to address these issues, especially during periods of high network congestion. These challenges highlight the need for continuous innovation and improvement within the DeFi space. As the technology matures, we can expect to see more efficient and cost-effective solutions that can handle large-scale adoption. Despite these challenges, the DeFi revolution is here to stay. The benefits it offers, such as financial inclusion, transparency, and reduced costs, are too significant to ignore. As more people become aware of and comfortable with DeFi, its adoption will continue to grow, driving further innovation and development in the space. It's likely that DeFi will continue to grow and evolve, integrating with traditional financial systems in new and innovative ways. This integration can lead to a more inclusive and efficient financial ecosystem where users have access to a wider range of services and products tailored to their needs, offering new and innovative financial products and services. The future of finance is bright, with DeFi and traditional banking working together to create a more accessible, transparent, and efficient financial world for everyone. DeFi has the potential to democratize finance and empower individuals in ways we never thought possible. It offers a glimpse into a future where financial services are more accessible, transparent, and equitable. While risks exist, the potential rewards are significant. As we move forward, we can expect to see continued innovation in the DeFi space, blurring the lines between traditional finance and the decentralized world. The future of finance is here, and it's decentralized.